Thanks for that introduction, and be glad to kind of run through what I see for gold uh, in the next several months ahead, and then over the course of the next several years. I do think gold is just beginning to come into its own after having what was a 7-year consolidation. Obviously, it ran into its highs back in 2011, had a big sell off from there, and then kind of went sideways for 7 years. And we're just emerging from that. I mean, gold's had a nice run since last May, and is correcting some of that run here, but I think has another leg up of upside here in the next several months. The miners, which got slammed over the course of the last several days with the bear market we're in. I do think that we're coming to an end of that, and I am pretty optimistic about the move from here through the summer. I think miners have lagged the price of gold, and frankly, silver miners have also lagged, and I think you're going to see some catch up in both those groups over the course of the next 6 months. So it's been a frustrating group for a while, but I think we may finally reap some benefits. My reasoning for my views in terms of being bullish near term for gold and silver and bullish for the miners is basically that they were so out of favor, and technically they're in consolidations that they're going to emerge from here in the next month. And I think over the course of the next several months, what you're going to see is all kinds of money coming into the system to try to keep the economy intact. Obviously, with the coronavirus situation, we have a global economy that's number one suffering from the shutdown in China, and number two, the spread of the coronavirus across the globe. So I think, given the leverage in the system, there's real risk out there, and I frankly don't think the central banks, including the Fed, are nearly up to speed in terms of the magnitude of what they need to do, magnitude of the risks that we're facing, and the magnitude of the required money that they're going to have to pump to just keep things intact. The narrative out there is that the Fed printed so much money this cycle that they really should not be printing anymore. People are very turned off to that, and I think Jay Powell has bought into that narrative. I think it's a very wrong narrative. I think before we're done, ultimately, we are going to see a global bust later this year, and I think it's going to require a balance sheet that grows from something just over 4 trillion Fed balance sheet to something over 20 trillion. We've got a highly leveraged economy with 250 trillion in debt and quadrillions in derivatives, and that's going to cause an unwind here that the likes of which we've never seen. So I call it a bust to contrast it from a depression, because I think it's going to be fast. It's not going to be a drawn out depression like we saw in the Great Depression. It's going to be something more akin to 2008-9, except much steeper and with a lot more financial calamity. I do think we're going to see the start of a financial meltdown, and just how fast do the central banks come in and stop that? Now, you may think we're in that now. It feels like it in the last few days. I do think they're going to stop this here. It won't take nearly that kind of money, but they'll be putting a lot of measures in here to kind of offset what's happened. And in the short run, I think it's going to trigger a final bull leg in the stock market. You could see the stock market, believe it or not, go from this 2,400 area back up to maybe 4,000, and I think that'll be a secular top that may not be revisited for a couple decades. And the reason for that is the next cycle, as a result of all the money that will be printed during the bust, we will jumpstart an inflation cycle, the first true inflation cycle since the 1970s. Anybody that's familiar with the 70s knows that gold did very well in that period, as did energy, stocks, etc. And I think that's what the period after this bust will be. So, say 2021, second half of 2021, maybe on through to late in the decade. I think gold and silver miners will be some of your biggest winners, maybe even the biggest winners in the entire market. And I think commodities in general will thrive during that cycle. It will mean inflation moving from negative. We'll have deflation in this bust, move from negative inflation to something back. I think we may retrace the entire move back to the highs of inflation in the early 80s. So it's going to be quite a run, and I think gold will be in the sweet spot of that. So I think miners will do very well. I'm predicting gold will probably top out in the low 2000s in this cycle before the bust, meaning between now and say Labor Day, and then in the bust could retrace a good part of what we're seeing now. Might get down towards 1,000, and then post bust in the second half of 2021 and beyond. I believe we're probably looking at something in excess of $10,000 on gold. So it'll move steadily through the decade. Silver, I think, can move short term up to 26, meaning between now and Labor Day, and move back down probably low teens into the single digits during the bust, and then make a run during the inflationary recovery cycle where it takes it up to 300 plus. So both metals, I think, are going to be in for big runs, and obviously the miners will be huge beneficiaries of that. Many of them will probably multiply 20-fold and more. So should be an exciting time. I think energy will also play in the inflationary 2020s. And the reason the market will not get nearly back to its secular peak is simply because you're going to have interest rates moving up with inflation, and PE multiples will be compressed. So, you're going to see a lot of money coming out of index funds, coming out of passive funds, coming out of bonds, coming out of defensive areas, and trying to find areas where returns are keeping up with inflation, and the metals and mining area will be probably at the top of that list. So should be a fun time. Also be, I think, an exciting time in the investment banking arena as a lot of new mining companies come to market, and with much higher prices, there'll be a lot more ability to mine some of the areas that have not been economical. So I think certainly the next decade is going to be a lot of fun. We just got to get through what I think is going to be a rough patch later this year. So thank you very much, and I welcome any phone calls or emails. I do have a investment letter called the Contrarian Value Advisor. It's basically a macro letter where you'll see more of what I've talked about here. So thank you.